Hello, and welcome to another episode of Follow the Money with Ugodre, proudly brought to you by Nairametrics. As you already know, this show is your weekly dive in on everything you need to know about the financial markets, the economy, finance in general. This is your number one plug. Proudly brought to you by the number one financial advocacy platform in Nigeria, Nairametrics. And this week, or the past week rather, the capital market has been in a frenzy, with insurance companies raising billions to food giants battling for dominance and banks adjusting their capital targets. And to help me make sense of all of this, I have with me seasoned analyst, Mr. Idika Aja. Welcome to the show, Mr. Idika Aja.
Good morning, Shego.
Yes, Mr. Idika.
Good to be back.
It's good to have you back.
Yeah.
So, Mr. Idika, diving right in, let's start with insurance. Over the past week, we saw Sovereign Trust Insurance PLC just announce an initial 5 billion naira raise through rights issues. Their first step in their plan to strengthen capital under the new insurance reforms. First things first, how do you see this move?
Shegu, Sovereign Trust, and I think it is in line with the new requirement, recapitalization expected from the insurance companies, which the President, Bola Ahmed Tinubu, just signed. It is in order because just like you can see what happened in the banking sector, the banks are expected to recapitalize. So it's expected, and it is in order for them to go to the market to raise capital. Although it is still they're still seeking for AGM approval.
Yeah.
So until then, once they get it, but I think it is in order.
But what do you think a raise like this really signals? What does it signal?
Well, actually, one, like I said, is when you are asked to recapitalize, you have to go to the market to raise funds. What determines whether you are going to make it or not rests squarely on your performance and investor sentiment.
Okay.
Now, I understand this is a right issue. That means not a public offer. That means you are giving the existing shareholders the opportunity to buy, to buy the shares. Though the details are not out until they get approval. Maybe we'll see what they are offering. But it signals that yes, they are trying to abide by the new regulation for them to raise capital.
So I myself, and I'm sure a lot of people, would like to know that when a company raises capital like this, how exactly are they being valued? Should shareholders be excited or should they be cautious?
For right issues, definitely, the right issue, when you issue it increases your shares outstanding. And currently now, the insurance company has about 14.23 billion shares outstanding. So if they issue right issue, and that will increase their outstanding shares, and that will at last now affect their valuation.
Okay.
If earnings is not somehow sustained, because the end of it, when you calculate your earning per share, you divide the earnings by shares outstanding. So if you increase the shares outstanding and you don't increase the earnings, definitely the earning per share will drop, and that will affect your valuation.
Thank you so much for even touching on valuation. Sorry to cut you short, because that was going to be my follow-up question. Like, what exactly does this mean for valuation? Does this book value improve, or does this justify their re-rating up to an extent?
Yeah, like I said, if you do a right issue, that will increase your shares outstanding. So if earning per share or earnings remain constant, definitely the earning per share will drop. So the essence is that you have to increase your earnings, especially profit after tax. Work very hard to ensure that you increase it, so that even with the growth in outstanding shares, it will not impact heavily on earning per share, which is the key thing. If you look at sovereign trust, I think current financial year their earnings dropped to 2 naira from 7 naira. You can see there is a decline, so they have to really work very hard. So when they come out with the details, we'll do the evaluation and find out okay, fine, yeah, your right is okay based on your fundamental. We advise people to go in and buy. So normally, yes, it does affect valuation, but the key thing is that as your standing shares are growing, you equally have to grow your profit to match that growth in standing shares, because that is where dilution comes. The effect of dilution comes in.
Okay. So for that regular Nigerian or shareholder listening to us right now, do they buy more to maintain their stake, or should they hold on a little to see what the management uses, how they use the money? What's your advice for them?
The advice, definitely you have to partake, because if you don't, definitely your holdings will be diluted, because if you don't, another person might take it. So if they are giving, we don't have the details. Like I said, we don't have the details. So if they're offering you 1 for 1 or 1 for 2, then it is important that because it's a right issue that is meant for existing shareholders, not for everybody. So it's advisable that you partake, so that one, it does not dilute your holding.
Okay.
And the only thing that you do, we pray that for the company to at least improve on their earnings, so that the evaluation will equally improve.
Okay. And ultimately, finally, how do you think this helps sovereign insurance, compete better, especially under this new insurance rules?
Well, one, actually, the issue now is that if you look at the balance sheet side of the insurance companies, even when you compare it to the banking sector, you can see that even the balance sheet size of one of the banks is even more than about 10 insurance companies put together. Do you get the point?
Yeah.
So, when you talk about the total assets of insurance company, put their total assets together, even one bank total assets is even more than 10 insurance companies put together. So actually there is need to increase their shareholding, increase their equity. That is good. But then it will equally, because when you have a good buffer, it will equally help you to at least increase your tier 1 capital, which is very, very important to know actually this is the position of the shareholder. This is what they have. That will equally help you to at least drop your leverage. I mean, if your leverage is high, because with increase in shareholders' funds, match it with total assets. It will, if you increase the shareholder from holding the total asset constant, of course your leverage will drop, which is very, very important.
Absolutely. Thank you so much for that insight, Mr. Idika. And now let's delve into what we call the Q3 race. We have Boa Foods versus Dangote Sugar versus Nascon. Specifically sugar and food processing. So we have these 3 giants all dropping their Q3 results as they prepare for full year numbers. So based on the numbers you've seen, Mr. Idika, who is leading the pack? These 3 brothers.
Okay, you have Boa Foods,
Dangote Sugar,
Dangote
Nascon.
Sugar, you have Nascon. They all operate in the consumer goods sector and food production subsector of the NGX. Boa Food is a little bit diversified, sugar, flour, paste, and so on. Then Dangote Sugar is mainly on sugar refining, because Nascon is into salt seasoning. Yeah. So that's what they do. Now, when you talk of who is leading, it really depends on the angle you are coming from. You can measure them from revenue, margins, that is efficiency. Then you talk about the profit, you talk about the balance sheet side, then you talk about dividend, you talk on valuation for what the market is saying about them. But first, let's look at their revenue, 9-month revenue. If you look at their revenue, absolutely is expected. Boafood is leading there. Yeah, Boafood is leading massively. Has a revenue of about 1.42 trillion, which is almost double of what Dangote Sugar did and almost 12 times what Nascon did. So you can see it. So from that revenue angle, Boafood led them. Now, like I said, it's not the only thing you used to consider.
What about dividend?
Look at efficiency.
Okay.
You might be have a very large scale revenues, but how do you use that revenue to generate cost? What is the bottom line? The revenue, are you using it to generate enough profit? What level of 1 naira you are getting from revenue turns into profit? Then from that angle, though, yes, if you look at their margin, Boafood is still leading. But in terms of growth, when you talk of growth, year on year, I think
Dangote.
No, Nascon did.
Okay, Nascon.
Nascon did better. Nascon overall, from that angle, margin and revenue, Boafood present the strongest investment case for anybody because it's strong, it's bigger. It has
it's more diversified. Don't you think that automatically gives it an edge?
Well, everybody has a niche.
Okay.
So it depends on the niche you are creating for yourself.
Okay, so like still on the numbers, what metrics would you say are still telling the real story? Are we talking about margin, volume, or cost control?
Yeah, I've talked about revenue.
Yes, you've spoken about revenue and dividends.
I've talked about the margin.
Yeah.
Now, if you actually look at their profit too, Boafood led to in terms of profit. Now, if you look at their balance sheet, where you look at the head of the company, how head is the company, then you go to the balance sheet. If you look at it from the scale, who has the highest number in terms of assets, of course, Boafood is leading. But when you talk of the health of the company, Nascon has the strongest balance sheet.
Okay.
With low, extremely low leverage.
Where does Dangote Sugar come in all of this?
Dangote Sugar, from that balance sheet side, carries the highest debt.
Oh.
And has the highest debt, and so it has a high leverage compared to Boafood and Nascon. But the most important thing is that when we are talking of debt, we actually look at ability of the company to pay the debt. So, notwithstanding, Dangote Sugar is interest coverage ratio, which we use to measure your ability to service your debt, is still okay. So it's not as if it is a red flag, but we are comparing 3 of them.
Yeah.
And when you look at 3 of them, relatively, Nascon has the strongest balance sheet size and has the best financial head.
I ask that because we see a lot of input costs, rising everywhere. So are these companies able to, should I say, pass it to consumers in some way, or are the margins just, skyrocketing?
No, for this year, if you look at the sector, not only that subsector, if you look at the consumer goods generally, what happened in 2023, 2024, and now 2025, you can see a shift. In 2023, 2024, because of the devaluation of the Naira that affected them, that led to high foreign exchange losses that almost wiped their profits, wiped their return earnings. Some of them sent them to negative return earnings and even wiped out their shareholders' fund. But coming to at least later part of 2024, Q4, they started recovering because of a little stability in the foreign exchange market. So coming to 2025, 9 months, you can see them doing very well, returning to profit. So yes, last year they were able to try to pass the cost to consumers, but this year a little bit stability, and that's why you see them making profit.
Thank you so much for even clearly, should I say, distinguishing them in sectors and subsectors. So, going forward, do you think there's a possibility of we seeing winners and losers clearly, emerge in this subsector?
I think the most important thing there, which is key to investor, is which one is cheaper for me.
Okay.
Whether you declare profit, huge profit, what is the market saying about you? That's the key thing. That's the most important thing. Is your valuation okay? Like I always advise, it's always good to buy stock that gives you value stocks that are undervalued. But at times, market might be saying because of what they're expecting from you, they can give you a premium valuation, which is in this case for these subsector companies, these food production subsector companies, where you have Boa Food has a very high valuation, what we call premium valuation, looking at its price to earning ratio. Why? Because maybe the market is saying, okay, we believe in your growth and we are ready to pay a premium. Premium now in expectation that you continue to grow. So the Boa Food has a high premium valuation. Danascon is fairly valued. It's not a high stock. So for me, I look at it as if somehow if it is relatively on the value supported by improving earnings, then of course Dangote Sugar remains deeply discounted. So
okay. And finally, in less than 30 seconds, because we're about to go for a quick commercial break.
Because
before we come back.
Dangote can't really, because of it has a negative PE because of its loss. So,
okay.
But I think on that valuation, I'll pick Boa Foods and Nascon.
Okay, let's go on a quick commercial break now. And when we come back, we would be talking about what the average investor should look into, or should I say what they should look out for if they are to invest in this, and on the FCMB raising their capital target. I beg your pardon. Hello and welcome back to Follow the Money with Ugodre. We are still on the conversation of Boa Foods versus Dangote Sugar versus Nascon. So, Mr. Idika, for the average Nigerian looking to invest in all of this, what exactly should they be looking out for?
You mean the three stocks?
Yeah, the three.
I've already mentioned it. One, Boa Food has the scale, it's strong, it's bigger than the other three, and secondly, one, it pays dividends. Though Nascon pays too.
Yeah.
I think the only company there that has not paid dividend for some time is Dangote Sugar because of its performance. You cannot be declaring losses and be paying dividend at the same time. So for dividend focused investors, Boa Food is okay, provided that they are able to sustain the profits, the expectation from investors. That is why they are pricing it high. That is why it has a premium valuation.
Okay.
So but Nascon is fairly priced to me, and I think even among three of them is the best in terms of share price performance.
Okay.
It has the highest share price performance compared to I think Boa has about 66%. The other one has about 72%. So Nascon has the best share price performance so far.
Okay, so thank you so much for that insight, Mr. Idika. And finally, to the FCMB raising their capital, the final topic that has got the market talking. We saw FCMB raise their capital targets from 340 billion naira to 400 billion naira. And some investors are already whispering dilution. But from your perspective, Mr. Idika, what does this really mean for FCMB's strategy?
No, thank you on that. It's good that you put this into rest. Even FCMB has issued a statement to that effect on people who are saying, okay, they are not prepared. Why is it that they started with 340 billion to 370, from now 370 to 400 billion? That it shows a lack of planning or preparedness.
Dilution, yeah.
But that is not the case, because what that means is it's not as if they are raising capital, they are just increasing their ceiling. Okay, fine, we are getting approval that, okay, we can raise up to 400 billion from the market. It doesn't necessarily mean that, okay, they are starting raising the money, or that's what they are targeting. It's just a ceiling they have increased. If you look at their latest results, their share capital and share premium account, which is what is being used to actually know whether you are going to meet up with new capital requirements by CBN. I think they have their share capital about 19.8 billion, while their share premium is about 46.68 billion. So you can see they still have more to be able to make up what is required. So at 400 billion, and the ones they have already raised, which they have not reflected in their results. So I think by the time they finish, I think the most important thing is for them to meet up that new capital requirement, which is about 500 billion international bank.
So from your perspective, and I know you do not speak for them, but do you think this is simply FCMB preparing for regulatory requirements, or do they see new growth opportunities?
No, all the banks are in the market. Some of them have met their new capital requirements. I think FCMB, Fidelity, I think First Bank, UBA, they are still in the market. The other listed banks outside these ones have mentioned, they have met their capital requirements. So it's just the new regulation for them to meet up with a new coming. I think it's the first quarter of 2026. So everybody is struggling. Everybody is just need to meet up with that new capital requirement. And I don't see any of them not making it. One, it is for capital requirements, and secondly for growth, because once you get that money, if deployed appropriately, it will increase your bottom line. So my challenge here is even that banks are going to be awash with capital, not even customer deposits, real tier one capital. And if all the banks, I think of the tier one banks, you have 5 of them. You have Fidelity. I think you have FCMB. Those are tier 2 banks equally struggling to get 500 billion naira of share capital and share premium account. You can see the expansion. You can see the volume of cash that will be available. So deploying and using it optimally is what matters, not necessarily the growth. We know they are going to grow.
Yeah. And do you think shareholders should be worried about dilution? Because a lot of people have been saying it, or from your perspective, is this some long-term value pay?
Well, I know people have been talking about dilution. The thing is this: if you like dilution, you talk is increasing your outstanding shares. So, and most of them, they have increased their outstanding shares. But where you see the impact of dilution is on earning per share. So if maybe earning per share was 2 naira, and you move your outstanding shares to maybe 41 billion. And you don't, the profit does not increase commensurate to the increase in outstanding shares. Of course, it will drop your earning per share. So that is what people usually say dilution, because if they issue right issue, like we talked about sovereign insurance, and you as existing shareholders, you took their rights. Of course, everybody started to take his or her rights. Of course, you will be at par. But what matters is that increasing your outstanding shares, what happens to the bottom line, what happens to the earning per share? Is the company still going to grow at that commensurate level of that outstanding shares to be able to have a decent earning per share? I think that is where the dilution comes in, and which overall will affect your valuation.
Thanks for even putting that to rest, so honestly. And finally, what indicators should investors watch out for, at least for the next few quarters, and to know if this capital will actually deliver returns in that regard?
One, you have to check the bottom line profitability. How much are they? Because at the end of the whole thing, you deploy the money, you make profit for shareholders. That is the key thing. So you check the profit. What's the bottom line? After that, because when you check the profit will now affect your return on equity.
Okay.
When you affect the return on equity, of course, it will affect investor sentiment. And from that investor sentiment, if it is positive, it will affect the share price. The share price will gain. Secondly, that is on one side.
Yeah.
Then the other one now, if you make more profit, that's why I said the bottom line is watch out for profitability. If you make more profit, you pay dividends. And when you pay dividends, shareholders will get it. And it will equally increase. Your dividend yield will increase, even if the share price, depending on what, irrespective of what happens from the share price angle. At least if you increase your dividend, definitely you are, all things being equal, your dividend yield will increase. Add the dividend yield to the capital gain yield. That will not give you what we call total shareholders return. You can see how the thing, the whole thing.
It's
impacts
on
because the bottom line is the total shareholders return. As a shareholder, what are you getting? As an investor, what are you getting? So the key thing for me there is the bottom line. Whether you manage well or you don't manage well, or at least you manage very well, fine. What is the bottom line? What profit are you getting or are you making from it? The other metrics you can use to measure it, you can use return on assets. Now you have increased your asset base, return on asset turnover, are using the assets to generate enough revenue. So that is if you want to go deeper. But now investors should look at the bottom line profitability.
Okay, finally, before we look at the top gainers and losers for the previous week, in 1 minute, do you think this makes FCMB more competitive or defensive from your perspective?
The essence of one, if you look at the reason for CBN increasing their capital base is to be more competitive,
yes,
to be able to finance projects, to have enough capital buffer. That is on one side. Then it's equally defensive too, because if you have enough capital, if there's any shock in the system, it will not affect the bank much. So on one hand, it's defensive, on that one to aid competition. Because if you have money, you can compete favorably.
Okay. Thank you so much for that insight, Mr. Idika. And finally, to the top 5 gainers and losers for the previous week. Kicking off on my list, we have Ikeja Hotel seeing a positive change of 10% to close at a price of 30.25 Naira. Up next, we have the NGX Group seeing a change of 9.98%, closing at 56.20 Naira. Up next is Academy, seeing a change of 9.70% to close at a price of 7.35 Naira. After Academy, we have Omatech, seeing a change of 9.35% to close at 1.17 Naira. And finally, on the top 5 gainers for the previous week, we have Cadbury, seeing a change of 8.63% to close at 57.90 Naira. Next is Mr. Idika to take us on the top 5 losers for the previous week.
Yeah, why we take that? I think maybe you omitted the summary, which is I think the ocean in the for the week. I think they gained 0.2, which is a plus coming from series of losses. At least again, then to close at market cap of 91.29 trillion, which is almost equally 0.2%. Then, of course, that pushed the all-share index to 39.44, which is still okay, even though it's a drop relatively from where we are coming. Now, looking at the top losers, leading that table, you have Abe Building that lost 10% to close at 5 Naira 85 kobo. Then Mayor Pence from the industrial sector lost 9.97 to close at 13 Naira 10 kobo. Then Suna Assurance, I think Suna Assurance did very well last year. But for this week, it lost 9.89% to close at 3 naira 92 kobo. Then you have the one we talked now. This is a sovereign insurance that lost 9.09% to close at 2 naira 70 kobo. Of course, the last on that list is Linkage Assurance that lost 8.02% to close at 1 naira 72 kobo.
Thank you so much for helping dissect that, Mr. Idika. Like I've always said, it's always a masterclass whenever Mr. Idika comes through on any of our shows. So for anyone listening, whether it is insurance raising billions or food giants fighting for market share or banks retooling for the future, one thing remains constant. The money always tells the story, and that's why we follow the money. So the next episode of Follow the Money with Ugodre, proudly brought to you by Nairametrics.